is Dr. Joshua Aura. I teach Auditing and Assurance at RCM Online College. So that is AA and AAA. When we talk of RCM Online College, basically it means that we don't have any physical presence. All our sessions are through Zoom and through videos. So welcome to our today's session. And today's session is going to be very interesting. It is going to be about an auditor. Before you say, yes, I'm accepting your appointment, what are you supposed to be considering? What are you supposed to do before you say what? Yes. Now I'm going to share my screen with you so that you can go through these notes together. Great. So the appointment process before you say yes as an auditor. Great. Auditors, we are told, must exercise great caution if asked to be auditors of an organization. Ladies and gentlemen, one thing that you need to appreciate from the word go, remember that this auditor is going basically to do what? The auditor will be going to examine financial statements, books of accounts of entities out there with an objective of forming an opinion. So if you are not careful and you get yourself entangled in an organization that has got issues, then automatically you'll also, in this case here, get into the same issues. And that is why if there is anybody who is supposed to do some quite over homework about knowing the organization, about knowing, in this case here, the directors of that organization, it is the auditors. You must really be able to do your due diligence, your homework very well, to see whether that company is good, to see whether you are technically capable. You have to look at the ethics. Do they allow you those ethics? Are you going to be independent? Or once you get into this organization and realize that the directors in that organization, some of them are your relatives, will you be okay with that? So before you say, I do accept, these are the things that I would want you always to consider as auditors. Now, ladies and gentlemen, here we are. We are told auditors must exercise great caution if asked to be the auditors of an organization. Are they professionally qualified to act? Is it legal and ethical for them to do so? For example, they shouldn't accept an appointment if the fees they shall receive exceed the 15% limit for public interest companies unless there are safeguards which are adequate. Ladies and gentlemen, listen and listen to me very carefully. When you look at this concept of fees, an auditor is normally recommended to have so many clients, if possible, diversify his clientele base, have a big portfolio, such that if A, in this case, is giving us 3% of our total income, B is giving us 2% of our total income, that is good. If you realize that you have got one client who is giving you some percentage of your total income, which will be like, say, 17% of your total income, you see 17% is more than our threshold. 17% is more than 15%. Then this is not very good for your business as an auditor, because at the end of the day, then you shall not be objective. You shall not want to lose such kind of a client. We have in Kenya here organizations that receive 30%, 40% of their income from only one client. It means that in the future, should that client here say, hey, I'm going to snatch this job away from you, you will put down your knees and say, please don't, because you are looking like your livelihood will go away. 40% is so big. So anything that is more than 15% of your total income being received from one client, ladies and gentlemen, such appointments in this case should always be done what here, rejected, especially if the company you are tendering to work for is a public listed company, a company which is having their shares trading at some stock exchange. And that is why, ladies and gentlemen, nowadays we are told that especially whenever we are out there let us strive to just offer what we call audit services alone. When you go to an organization, for example, you come to RCM Online College. At RCM Online College, you are auditing us, and then we end up giving you some other engagements like what here, like taxation. So what will happen is that the fees you'll be drawing from RCM Online College will be quite substantial as compared to the fees you are receiving from other, for example, companies. That automatically will take RCM's Online College fees receivable by yourselves as auditors to more than 15%. So we have to focus on audit services. So it is very important, ladies and gentlemen, that you do your due diligence, and doing our due diligence before we say yes, before we sign that contract, before we sign that engagement. It will be very good for us to ask ourselves, are we technically qualified? Do we have the capacity? Do we have resources? Are we capable? How good do we know this industry where we are trying to venture ourselves? And of course, the concept of ethics, the concept of what here, independence. Now, ladies and gentlemen, here we are. I don't want to really get away from my road. We are told here, if the fees, for example, exceeds this 15% limit for public interest companies and public companies, you should be able to reject that appointment. Another point here, do they have adequate resources in terms of staff, time, and expertise? If the potential audit client acts in a specialized area of business and the auditors have no prior experience of that, it would be unwise for them to accept the appointment. Ladies and gentlemen, it's not all about money. It's about us as auditors being able to add value to our clients. And we can only add value to our clients if, for example, this client here belongs to an industry that we have been for a long time. You can imagine someone like myself who has been in the industry of academia for over 20 years. If I'm told to go and audit, for example, a university like Strathmore, I'm so sure I'll be able to add a lot of value. But what if you take me in this case here to a very different territory? For example, you tell me to go and audit a shipping line somewhere there deep in those oceans. What do I know about ships, ladies and gentlemen? Do I even know the names of the people who work in those facilities? No. There is very little value that I'll be able to add. Actually, I'll be learning, of course, in this case here from square one, not unless I will be partnering with the people who have been in that industry for so long, then that way we can accept the appointment. Otherwise, if you are carrying an accountant like myself here, who has never worked in a hostel at all, and then for the very first time you want me as an engagement partner to accept auditing a hostel, that would be a big joke. That would be a big joke. Ladies and gentlemen, listen here. We are told something very important here before we say we do, before we say we are accepting. We must investigate the client, its management and directors. Many firms of auditors have access to databases, which, for example, will allow them to search on directors' names to see if any of them has been banned by CMA, Capital Markets Authority, from being directors of companies because of their past behavior. They may discover that it's too risky to become an auditor of a company if they have no trust in the honesty of the directors. The audit fee is often modest. Why risk your reputation by undertaking an audit where the directors may be fraudulent? Ladies and gentlemen, this is a very important thing that you must always consider before you say, yes, I do. Before you say, yes, I'm going to audit you people, I have to do a lot of background search about your company, about directors. In this case here, are the directors of this company paying their debts, right? I look at even the balance sheet, the statement of financial position. The moment I realize that these people have issues to do with their liquidity, that their current liabilities are more than their current assets, then I should reject this kind of an appointment, because I know even myself, my debt will not be paid as an auditor. So it's very important for me to do a background search. Great. Now, ladies and gentlemen, here we are. Yes, we must consider the present auditors, or in this case here, the outgoing auditors. There is a professional requirement to do this, and it is essential to find out why the old auditors are retiring or being removed. Ladies and gentlemen, remember this is quite a tricky process. Here we are told at the end of the day that here we are as the incoming auditor. The incoming auditor, this is the company that I'm coming to audit there. Here I am, I'm coming there by force. So this is the incoming auditor. And then we have the old or outgoing auditor. This is the firm. So you can see between these two gentlemen or two ladies, ladies and gentlemen, what is in between them? What is in between them is a layer, is the firm itself. And remember issues to do with confidentiality. An auditor is not supposed to really disclose information that they came along as they were auditing the firm to any third party without the consent of the directors here, without the consent of the firm's directors. So then as an incoming auditor, the first thing that I will do is to ask for, please permit me, give me permission to talk to the outgoing auditors. In writing, they'll tell us, no problem, please go ahead and contact them. So I'll write a letter to the outgoing auditors. When I write a letter to the outgoing auditors, having given permission by the directors, I'll wait for this guy to reply. This guy will not also reply that directly. What this guy will do, he will have to go back to these directors again. Remember, the layer is two-way. It's two-way. Telling them, are you aware of Aura CPA, who is claiming to be coming in to audit you people? And if you are aware of them, can I go ahead and tell them why I'm leaving or why I'm being removed? Can I give them that? So of course, ladies and gentlemen, these directors will say, for example, yes. If they do that, then these guys will go ahead and do what? Give the information to the incoming auditor. Now, ladies and gentlemen, what if I go asking for permission from these directors and then they tell me bluntly, without any doubts, that no, we are not allowing you to talk to the outgoing auditors? Then I should reject that appointment. I'll not say yes to that appointment. I'll say no to that appointment. All right? All right. That is very important for us to be able to really communicate. The same case, if the outgoing auditor asked for permission from these guys here to talk to this guy, and these guys refuse, at times they could play with you. They'll tell you, fine, please go ahead and communicate with the outgoing auditor. And then they come and tell the outgoing auditor, don't talk. So of course, the outgoing auditor will write to me telling me that, hey, you know what? We have not been allowed to give you any information. If that is the case, I will straight away say what? Yeah, no to the appointment. Now listen, ladies and gentlemen, what if this guy, I write to him and he keeps silent 100%, he doesn't talk to me? Then I'll assume that everything was good, right? Of course, I must send some reminder. Tell this outgoing auditor, for example, if you don't give me any feedback in the next 7 days, then I'm going to accept. I must keep on giving them reminders. But even if they don't confirm, so long as they don't write to me anything in the negative, they've decided to go silent 100%, then that will not prevent me from accepting. I'll accept the job, knowing that these guys, of course, do not have any matters which they thought wise to share with me. No matters at all. Now, so let us read this together. Please, as I explained, don't be making any notes. As I explain, it will be very important for you to be doing what here? Just keep your ears down. Ladies and gentlemen, here we are. We are told here, communication with the existing auditors. If the auditor is approached by a new audit client, If it's a new business and this is the first audit there will be no previous auditors to communicate with. And the new auditors must make their own decision. So if it's a business that has just begun, where we are going to be their first auditors, then there is nothing like really communicating with any outgoing auditors, really. If it's not a new business and there is an existing auditor, then the new auditor must ask the client for permission to contact the old auditor. If permission is not given, the appointment here should be declined. Don't accept. Why would permission not be given? Is a client trying to conceal something? Why else would they not allow a new auditor to communicate with the existing auditor? There must be issues to do with what here? Integrity. Assuming permission is given, the new auditor will write to the old auditor for information. The old auditor can simply send that information to the new auditor because that is confidential. And the old auditor has to ask the client for permission in turn. If that permission is not given, the new auditor should decline the appointment because, again, the client is trying to stop communication between the old and the new auditors. If the old auditor provides information, then the new auditor is more fully equipped to make their accept or reject decisions. If the existing auditor decides not to provide information, the new auditor might have to rely on information from other sources. A new auditor appointment does not require the old auditor's consent. If the existing auditor does not reply, the new auditor can write that they will assume no matters unless they receive a reply within a stated period, for example, 7 days. A proposed auditor is not expected to refuse to act merely on the grounds of unpaid fees owing to the existing auditor, although best practice is, if I come in and I realize that the outgoing auditor was being mistreated, it will be in my own interest to ensure that the outgoing auditor is paid their dues. It's very important because the same will be getting me. Remember, I'm not coming to audit this organization permanently. Now, ladies and gentlemen, we have something very important here called preconditions for an audit. Pre means coming first. Those things that must exist if I'm to start an auditing, if I'm to start the audit process. According to ISA 210, agreeing the terms of audit engagement, an audit can only be accepted or continued if the preconditions for an audit are present. The financial, this is very important, the financial reporting framework for the preparation of the financial statements is acceptable. If a company is not using a financial reporting framework that is acceptable, then I should decline the appointment from the word go, because this is a preconditionality. So a financial reporting framework for the preparation of financial statements that is being applicable by this firm must be acceptable. So is the firm making use of IFRS? Is the firm making use of IAS? These are the financial reporting frameworks or the GAPs, the generally accepted accounting principles. If they're making use of those ones, then, ladies and gentlemen, they have met the first conditionality. Number two, the management agrees that it acknowledges and understands its responsibilities for the financial statements, including internal control, and to provide the auditor with information that is necessary for the audit. There is a common understanding of the terms of the audit engagement. These matters must be formally documented in an engagement letter. An audit engagement must be declined or discontinued if management or those charged with governance impose a limitation on the scope of the audit, i.e. the auditor will not be able to form an opinion. Number two, the preconditions are not present, e.g. the financial reporting framework does not provide suitable criteria for an assurance engagement. I would want to explain this, ladies and gentlemen, a little bit. I would want to explain this a little bit. The concept of what here? Preconditions for an audit to really get started or continue. This is very important for us. Ladies and gentlemen, remember we are giving you this class from RCM Online College, which purely is a college that exists virtually. We do not have what here? Any physical presence anywhere. We are a Zoom college. We teach through Zoom and we also have videos. So ladies and gentlemen, this is quite important for us. Ensure that you acquire our tutorials by calling us 0719 525,000. Great. Now the preconditions. Ladies and gentlemen, the first pre means coming earlier. The first precondition is which one? The first precondition, number one, the first precondition is that for me to come and audit you, you must be applying a relevant financial reporting framework. These IASs, these IFRSs, if you are applying them, then automatically these are good financial reporting frameworks. Then I'll be able to do what you have to accept. So the financial reporting framework must be there, including if, for example, you are a SACCO, which is not following the SASRA requirements in terms of financial reporting, then I will not accept the appointment. And then number two, ladies and gentlemen, we have this is quite an important one, the concept of the management recognizing their responsibilities. The management recognizing their responsibility. If they don't recognize their responsibility, if they don't know, like most management for sure do not know what their responsibilities are, then straight away I should reject the appointment. The management actually in writing should be able to tell us that we know our role as managers, our role as directors here is to prepare financial statements of our entity. It is not the auditor who will come, ladies and gentlemen, to help a company prepare financial statements. No, this is the role of who? The role of managers. Very important for them to appreciate this and put this in writing. The other thing, ladies and gentlemen, which is a preconditionality, is that the management also is aware that it is their primary duty to ensure that they put in place effective internal control systems. Effective internal control systems. It will also be very important for them to recognize as a pre-conditionality that they shall be able to furnish auditors with information that we need to be able to form what here? An opinion. To be able to form an opinion, we need information. So management must acknowledge that as their responsibility. If they don't give us information that we shall be using as evidence, which we shall be using to really form opinions, then we are nowhere any near to accepting the job. Even if we are broke, at times auditors are forced to really accept jobs, even when they look that they can't handle them, simply because of what they desire for money. They put profit ahead of what here? Circumstance. It's a circumstantial thing. And that is why, ladies and gentlemen, all these preconditionalities must find their way to what we call an engagement letter. Now, ladies and gentlemen, here we are. We are told an engagement letter. Upon appointment, auditors should send an engagement letter to their new client. Engagement letters are often regarded as rather dull documents sent once and then forgotten. However, they are of crucial importance because they set out the contractual relationship between the auditor and the client. If the engagement letter is not sent out, it's very difficult for an auditor to subsequently complain that the client hasn't done what was expected, or it might be difficult for the auditor to defend the firm against a claim that the auditor has not done what was expected. Engagement letters are quite funny. To me, I'll say they are very interesting things because, ladies and gentlemen, without these engagement letters, then automatically things will fall haywire. Things will fall out of the way. So an engagement letter is a contract. A contract between who and who? Between the auditor and who? And the client. And this particular contract, ladies and gentlemen, will stipulate so many things. We're going to see the contents of a management or rather an engagement letter. So in this engagement, we must define the scope of the work. What am I going to do as an auditor? We must define the scope of the work being done. Ladies and gentlemen, we must define, number 2, the auditor's responsibilities. And we know that the auditor has got only one responsibility: to look at the financial statements and form what here somebody an opinion, right? So my major responsibility is to form an opinion. It is not my responsibility as an auditor to detect and deter fraud. If during my procedures, when I'm putting down these audit procedures, I come across fraudulent activities, then I'm required to report the same to the management. But I'm not coming to your company. Please, it's important for us to get this so that we can be able to know how to minimize what we call the expectations, expectations gap. Because at times, you will get an organization, when an auditor is coming, the organization could be expecting the auditor to do big things, right? Some organizations, ladies and gentlemen, they expect an auditor to come and do financial statements for them. Some of them expect an auditor to come and do taxation for them. So they expect big things to be done. And yet the auditor knows that my only thing is to form an opinion. So you can see the gap between the two expectations gap. So to narrow down on this expectations gap and if possible close it to 0, an engagement letter is key. And the very least things that must always be in that engagement letter: number 1, the scope of the auditor, the scope of the work. The work has to be scoped there, right? Ladies and gentlemen, management's responsibilities. We must clearly state in the engagement letter what the managers are expected to do. The management, of course, number 1 is expected to do financial statements. They're supposed to prepare financial statements. Ladies and gentlemen, the management is also expected to put in place effective internal control systems, ICS. Number 3, ladies and gentlemen, this management is expected to put in place mechanisms that will be able to detect and, of course, in this case here, prevent the firm from experiencing fraudulent activities. So, ladies and gentlemen, and then, of course, we have the auditor's responsibilities being captured there, but I would want us to read this together for us to see whether really we have appreciated this subject. So we are told here that engagement letters define the auditor's responsibilities. They provide written evidence of the auditor's acceptance of the appointment, should be sent to the board of directors or audit committee prior to the first audit, should identify any reports to be produced in addition to the auditor's report. For example, for banking or insurance clients who may come under additional scrutiny. And additional scrutiny, of course, you'll get, like if it's banks, for example, would want an auditor to also endorse, to also look at critically their liquidity position and report the same. So we have to agree. I know for sure that as an auditor, I'm coming to form just an opinion on your financial statements in general. But what if you want other reports? It'll be very important for me to come and say, other than the auditor's report and what we call the management letter where we advise management about ICS, it will be very important for me to agree with you which other additional reports would you need. Then here we are told here should be updated for all changes. For example, if the auditor begins to undertake tax work for the client, we must always, in this case here, update. So we have here typical contents of an engagement letter. Typical contents of an engagement letter. Description of the objective of an audit, which is always to obtain reasonable assurance whether the financial statements are free from material mistakes, from material misstatements, and issue an auditor's report that includes an audit what year? Opinion. So the objective, we must tell these people from the word go, what is the objective of this audit? My objective is not to give you absolute assurance. Absolute means foolproof. Absolute means that I'm auditing everything in your firm. I don't have resources to do that. As we are only mandated to work through sampling. So if it's vouchers, I don't have to go through 1,000 of your vouchers, thousands and thousands of your vouchers. Even 100 vouchers are okay. Even 10 vouchers are okay, depending on the internal controls that you guys have. So basically, I'm coming here to give you a reasonable assurance. And at the end of it all, I'll be able to give an opinion regarding the financial statements you've told me to audit. The second content that must be there is defining responsibilities. Management are to prepare the financial statements and to set up a system of internal control. It is the auditor's responsibility to audit financial statements. All right, we have number 3, reference to the applicable financial reporting framework. For example, the IFRSs, you must refer to them. Number 3, emphasis that audits depend on sampling, that there are no guarantees. There are no guarantees. The audit looks for only material misstatements. It will examine records on a test basis that can only give a reasonable assurance. It's good to keep on emphasizing that. So that in future, should something in this case here come up, like there was a fraud of 100 million and shareholders feel that they lost that money when the auditor was there, they may take you to court. When you are in court, you'll be able to say, you know what? My work as an auditor is to sample on a sample basis. I should be able to give you what we call reasonable. I'm not giving you absolute. When we talk of absolute assurance, it means that we're giving you guarantees. No, we can't guarantee. We can't guarantee. We can't guarantee. Okay. Okay. Now, the other thing, I'm repeating again this point, ladies and gentlemen, is that defining the responsibilities, management are to prepare financial statements and to set up a system of internal control. It is the auditor's responsibility to audit the financial statements. Number 3, reference to the applicable financial reporting framework, very important. IFRSs are being used. Number 4, emphasis that audits depend on sampling and that there are no guarantees. The audit looks for only material misstatements. It will examine records on a test basis that can only give a reasonable assurance. The auditors will state that they expect unrestricted access to the company's records and they expect full explanations for any queries they might have. They will state that the auditor's report is a matter between them and the addressees of the auditor's report, the members of the company, and that it should not be relied upon by other parties. You must have seen these things in papers where somebody from out there, a potential investor, went to Safaricom's annual reports, read the auditor's opinion, and went to make a big investment in Safaricom. Safaricom, of course, is a good company. I'm just giving it as an example. They went to make there a big investment on the basis of the auditor's opinion. So later on, if things go messy, become messy, they go south, you will get some investors taking the auditors to court. Then I'll be able to pull an engagement letter, tell them, hey, you did not hire me to do this job for you. This job I was given by members of Safaricom, who are the shareholders of Safaricom. So this report basically is between me and the members of who? Of Safaricom. So it will be very important. Listen, I'm repeating this again. They will state that the auditor's report is a matter between them and the addressees of the auditor's report, the members of the company, and it should not be relied upon by other parties. Third last, there will be certain matters about planning the audit, such as arranging the interim audit and the final audit, attending inventory counts, organizing external confirmations of receivables, and liaison with the internal audit department. So it's important to tell these people from the word go that you know what, we shall be involved in your inventory counts. We shall be doing what we call debtors circularization, where we confirm balances from your receivables. That often we shall be really liaising with your internal audit department. It's good for you to bring this issue of internal audit department in an engagement letter. Second last, almost certainly there will be something about fees. And remember, fees should never be absolute. They should be estimate, but subject to the provisions that if more work needs to be done, it will be done and additional fees will be required. So never ever quote that I'm going to charge $1 million Kenyan shillings. What if these guys decide to give you more than 1 million jobs within the company? So in this case here, this is an estimated amount, and it should there be basically an addendum, right? A platform allowing you to increase that figure a little bit here and there, depending on additional jobs that come. Should be there, yes. Then we have here a description of the expected relationship between the external auditor and the internal audit, how the work of internal audit might be reviewed and then relied on by external auditors, So I'd want to give you a chance of taking a screenshot. Please take a screenshot of these notes. It's important that you take a screenshot of the notes. Ladies and gentlemen, I would want to move to something a little bit different, but very necessary. I'm trying to look at both chapter 4 and chapter 5 at the same time, organizing the content in a way that you guys will be able to follow this very easily. And of course, I have the same stuck in your mind for the longest time ever. Now, I would want us to look at the auditor's rights and duties. One thing you're supposed to know is that once you have been appointed as an auditor, you are a powerful stakeholder, you are a powerful individual. So that, I'm reading here, they can carry out their duties properly. Auditors have very powerful rights. For example, they have access to all records they require. You can't come and tell them later on that you know that these are board minutes. We can't give you their confidence. There is nothing that is confidential. An auditor, once appointed, normally gets access to whichever record they need. Number two, they have a right to receive information and the explanations of all transactions. So they call upon management to furnish auditors with any ledgers, with any records, with any explanations. Management can never do what you can never refuse. They have the right to receive information and explanations of all transactions. They also have a right here to attend and receive notice about general meetings. And they have a right to speak at those general meetings on relevant matters. Ladies and gentlemen, especially the annual general meeting, this person must be given information regarding the resolutions, the agenda that will be discussed in the annual general meeting. He has a right, and of course, he is always invited into any AGM, annual general meeting, a meeting of members, a meeting of shareholders. And in that meeting, he has to be given a slot to talk to the members. So you talk of rights, you're supposed to always remember these. You also always remember that the auditors here have access to all records they require. It's a right. They have a right to receive information and explanations of all transactions. They have a right to attend and receive notice about general meetings, and they have a right to speak at general meetings on relevant matters. A general meeting is where the shareholders of the company come together, and the annual general meeting ensures that there should be at least one of these meetings every year. auditors have the right to receive in advance information about any resolutions that are proposed to be put at these general meetings. They have right to information. And finally, they have a right to require the company's financial statements here should be presented at the general meeting. Otherwise, these fraudulent directors here may say this section of these financial statements, I will not take to the AGM. Otherwise, of course, if the financial statements contained information which the directors wanted to keep secret, the directors could delay presenting those. So they are right to be informed about, attend and speak and be heard at general meetings, gives auditors an opportunity to communicate directly with the shareholders by whom they have been appointed and for whom they are acting. Typical duties. Major duty of any auditor is to issue an opinion. 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 An opinion as regards to truthfulness, fairness of the financial statements, whether the financial statements are properly prepared in accordance with the IFRS financial reporting framework, and of course, any other opinions required. The second duty is that when leaving a client, he has to issue a statement of circumstances. Why did I resign as an auditor? You have to give circumstances that led you to decline working with this company, a statement of circumstances. Number 3, after resignation, to supply information to the new auditors. You are obligated, you have this obligation. A very important concept here, ladies and gentlemen, is that an auditor must pass an approved set of professional examinations set by a recognized qualifying body. Like in Kenya, it's CASNEB. You must pass those exams. There is no way you will be appointed as an auditor if you have not passed your CPA. You can't become an auditor and practice in this country if you don't pass your CPAs. Now, number 2 is that after you have passed your CPAs, after you get finished with the CASNEB, you must go one ladder higher and join ISPAC. Must become a member and stay a member of a recognized supervisory body, e.g. ISPAC. ACCA is international, ISPAC here. The auditor must not be a director or employee of the company or of any associated companies. So we want this auditor to be independent. And for him to be independent, we are told this auditor should never be a director or an employee of the company or of any associated companies. The auditor must not be an employee or business partner of a director or employee of the company or of any associated companies. I hope, ladies and gentlemen, that is clear enough. Ladies and gentlemen, a very important concept here is about appointment of auditors. Remember, the auditors are normally sent to audit a company by the members of the company, by the shareholders of the company. So then that begs for one thing to be understood, that it is the shareholders who normally sit in an annual general meeting who will be able to appoint who? Who will be able to appoint auditors. So it means that appointment of auditors basically will be like on an annual basis, most preferably through an AGM, annual general meeting. So even if we want to retain an old auditor, still his name has to be at the agenda box of the AGM for purposes of what here confirmation. It's important for the shareholders really to feel that they're the ones who are charged with the responsibility of appointing an auditor. So we are told here that auditors have to be reappointed by a resolution at every annual general meeting. Note that appointment is not automatic. This is to prevent the incumbent auditors from staying in office. We don't want these incumbent auditors to overstay in office. They also need to know that every year they are going to be scrutinized. Every year they are going to be a subject in the discussions of the AGM. That is how they'll be able to push in and do more for these companies. The requirement for a resolution means that the members have to take a positive action to get auditors appointed. Prior to the first AGM, now the AGM has not reached, and maybe the company is new. When the company is new and the AGM has not reached, ladies and gentlemen, directors who are sitting in the office have a responsibility of appointing the first auditors. This is very important. Prior to the first AGM, the directors can appoint the first auditors. Or if an auditor resigns in between the year because he or she falls ill, then the directors can appoint another auditor to fill what we call a casual vacancy. But if, for example, you come in between, you've been appointed by directors, then you can only serve for the period left to the AGM. At the AGM, the shareholders shall either confirm you who came to fill in this casual vacancy, or they will send you home, they appoint any other person. So you're told here that if the directors can appoint another auditor to fill what year a casual vacancy, this appointment will only last until the next annual general meeting. If, for example, we are not able to agree as directors, as shareholders on appointment of an audit, there is no way any company, especially if it's a listed company, can ever be allowed to stay without an auditor, even for like a month. Actually, the rule is that we should have an auditor continuously. So then it means that, ladies and gentlemen, if for some reason, then these companies are not able to agree on an auditor because of the infighting. At times in these companies, people tend to fight too much and they make a lot of noise. Now, because of that, then the government will step in and appoint an auditor for this particular company. So you're told if all else fails, then even here in Kenya, right, you'll get the registrar of companies here. It could be the registrar of companies, or SASRA, for example, that regulates what here? That regulates SACCOs, etc. In other words, the government will ensure that all companies have an auditor, public listed companies have an auditor. Now, from there, ladies and gentlemen, we go straight away to the resignation of auditors. But before I do that, could you kindly take a snapshot of this? Take a minute and take a snapshot of that. Great. So resignation of auditors. Ladies and gentlemen, these auditors, of course, they are human beings. At the end of the day, they could get tired. I mean, this is becoming monotonous. Why should I audit one company throughout, really? I mean, I may be seeing some red flags telling me that this company, I mean, the directors are not good, they're fraudulent, right? So if I feel that I should resign, then what happens? So resignation of auditors can resign by giving written notice and a statement of circumstances to the company. A statement of circumstances explains why they have resigned. Written notice must also be sent to the regulatory authorities and members of the company. So the notice that I'm going to resign from next month, I'll no longer be here. If I'm auditing a SACCO, the regulatory authority of SACCOs is what is SASRA. I have to notify them. And then number two, I must notify all the members through the registered addresses. I must tell them, you know what, I'll not be here next month. And then importantly is to issue a statement of circumstances. So I'm issuing that notice and then I attach a statement of circumstances which made me to resign. The thinking behind the statement of circumstance is that auditors may have resigned because they are deeply concerned about some aspect of the company activities. So the statement of circumstances explains why the auditors resigned, which could of course have been caused by perfectly innocent reasons. For example, that the auditor wishes to cut back on work. Yes, I feel I have got too much. Or the auditor feels that the company is now too large for the auditing firm to deal with. If the auditors are really concerned about the company, and that is why they have resigned, they could also require the directors to call a general meeting so they get to explain the circumstances of my resignation directly to the horse's mouth, directly to the hiring authority. So I'll ask the directors to call for a general meeting. I explain to the shareholders. That is allowed. That's my right as an auditor. The auditors can then address the members and explain their concerns and why they have resigned. From there, we have removal of auditors. Of course, these auditors, at times they could become also a useless stakeholder. They are not able to detect fraud. They are simply there waiting for their paycheck. We're not feeling that they are doing anything much really to help. They're not adding value. Then how do we remove them from the company? Remember, ideally, the removing authority should be who? The hiring authority. So remember, these guys came to us through who? Through the shareholders, AGM. But at times we'd want to remove them in between here without AGM being anywhere close. So we are told here auditors can be removed from office. This would normally be at the instigation of the directors, but the resolution must be passed by who? The shareholders. They could be removed from office for perfectly legitimate reasons. Perhaps the auditor failed to find a material fraud, and the directors have lost faith in their competence, or perhaps the company has become international and a larger audit firm is needed. However, the auditor may have been too good, too insistent that certain aspects of the financial statements should be changed, or perhaps issued a modified opinion, or qualified opinion, or adverse opinion, because the directors refused to change the finance. So what you're saying is that these directors are also not very clean. Chances are they may not want a very clean auditor. So they would want, in this case here, this guy to go home. Simply, he's protecting the company from losing assets to these directors. This is why the auditors are given the right to make representations, to have a statement of facts, stating them to this General Assembly about why they should stay in office. The same, remember, you're using the UK law. Even in Kenya, for example, the auditor is required to deposit a statement of circumstances or a statement that there are none at the company's office, and this should be sent to the regulatory authority. The auditors can also receive notices, speak at a general meeting at which their term of appointment would have expired. This allows the auditors, if necessary, to explain to shareholders what has happened and that they may have been removed without without due care. Without due care. We come to the last area, ladies and gentlemen. How is auditing regulated in Kenya? Of course, through our professional body. Our professional body, where you see ACCA, you simply put what here? ISPAC. So through ISPAC here, right? If we mess up, we know as auditors, if we mess up, it is ISPAC that does what here? It is ISPAC that at the end of the day, ladies and gentlemen, disciplines us, right? International bodies, e.g. IFAC, the International Federation of Accountants. Yes, international bodies also come in handy because they're the ones who give ISPAC, the ethical and whatever, right? So we have here national bodies, yes, especially for like now government, right? Like government, right? Government parastatals. We have national bodies that also guide how the Auditor General does audit. The purpose of International Federation of Accountants is to serve the public interest by establishing and promoting adherence to high quality professional standards. It has a number of boards which are very important for you to understand. We have the International Auditing and Assurance Standards Board, sets international standards on auditing, ISAs. And then we have the IESBA, this new body of ethics. International Ethics Standards Board for Accountants issues the International Code of Ethics for Professional Accountants, and then they're able to give what here, these standards to ISPAC. That is why ISPAC pays the subscriptions to them. So when you talk of regulations, you're supposed to understand that accountancy, especially in Kenya, accountancy is a self-regulating what here? Profession. We regulate ourselves. We have ISPAC there. ISPAC is the mother body. It is the one, ladies and gentlemen, that is charged with the responsibility of ensuring that the auditing practice in this case here runs nicely. They're the ones in this case here who register institutions, ISPAC or other auditing firms. After that, they're the ones who will be coming to the ground to ensure that you are able to offer quality services. So, ladies and gentlemen, remember, you're receiving these great lectures from RCM Online College. From RCM Online College, don't hesitate to give us a shout, by calling this number 0719 525 1000. That is it. So we've come to the end of our presentation. And please, if you are willing to become our student, remember we only teach through Zoom and through videos. Please don't hesitate to call this number. We shall be able to do what here to give you good services. Thank you very much. My name is Dr. Joshua Aura. Bye-bye.